Good morning. Welcome back. My name is Timothy Carrier. I want to do just a quick preview of how the market is performing at the moment. Following up from our weekly analysis that I did on Sunday. And then I think on Tuesday, I did another analysis, daily analysis. And so today I just want to basically look at how the price is moving at the moment, or what the market has been doing. Those that have been following the analysis that I've been doing, I believe you have been able to capitalize on a few movements, on good entries. In terms of your trading, you've been able to capitalize and get good entries. And I believe if that's how you just build yourself, okay? Especially for the new base, that's how you build yourself. You want to see how we analyze the market. And then the key thing is that you want to practice by yourself as well, so that you can build the confidence and ensure that you are in a position to do the analysis by yourself, okay? So, but I usually endeavor to make your work easier. The reason I always like doing the analysis, so that we can all have a perspective or different perspective in terms of how maybe the market moves, or in terms of how we do the analysis. Quickly looking at the DXY, we had targeted this level around that point, and then we had targeted another level around that point. So what happened? DXY reached our region here, and then there was the first target, and then there was the retracement on the upside, and that retracement basically the price went all the way to around this region here. So this is an area of it's basically an area of resistance. If you try to draw around that region, so it's basically this is an area of resistance this side. So I mean support. So on the left it was resistant, then the price broke through the resistance, then it came this side, it became support. Okay, so it was the price broke out from this support. You can see that huge candle, that was the breakout. Then the price came back to test that region. Okay, so basically now where the price is at the moment, this region acts as an area of resistance. Okay, it acts as an area of resistance. So we anticipate the price to push maybe downwards again to 103.20, then around 102.943, and in the long term we might be anticipating around this level, the 1.200 levels. Okay, 1.200 levels, because this is a very key it's a very key institutional number. Okay, it's a very key institutional number. So that's where we might be anticipating the price to reach in the near future, in the long run. So in the 4-hour time frame, so you can see what the price is doing in the 4-hour time frame, just coming out from this area of resistance, and the price is trying to drop downwards. So we anticipate the price to take these lows out and probably come out there to 102.94 before probably maybe seeing another retracement or another major retracement, and then continuation on the downside. Okay, so basically in the higher time frame, I am bearish. I'm bearish because the higher time frames, they're the ones that gives us the directional bias. So in the higher time frame, I'm bearish for DXY. So let's see our favorite, that is gold. Let's see how it's performing. So with gold, so this is what we have for gold. So there was this setup that was activated. It looked about this daily, this area of this area. We had a demand zone. Okay, we had a demand zone, and the price pushed about 119 pips. Okay, 119 pips. So basically, we're seeing a retracement from around this region, because here we have an area of we had the neckline around this point. Okay, we had the neckline, that is the neckline around that point. So the price broke from the neckline, then coming to test the neckline, and probably the fact that I'm bearish for DXY, it makes me definitely be bullish for gold. Okay, so it might respect this neckline, but it might not respect the neckline again, because from the movement of the price, how the price has been moving, you can see basically we are in an uptrend, right? The price is creating the higher highs and higher lows. So we are in an uptrend. We are in an uptrend. So that gives me, not unless now the uptrend is broken, then I'll be bearish. Okay, not unless the uptrend is broken, I'll be bearish. So for now, I look to be more bullish, to be bullish with with gold. So again, you can see from these daily, was it daily or it was 4 hour? From this 4 hour demand area, we also had a demand in the 1 hour time frame. Okay, we had a demand in the 1 hour time frame. The reason why price had to push all the way from this level. So right now, like I usually say, when you're doing analysis, you want to look from where the price originated from. So this was the origin of this movement, these demand zones. Okay, the 4 hour and the 1 hour demand zone, they're all together. Okay, so right now we can say that is the movement. The reason why now we are anticipating the next level is for the price to try and maybe probably attack these equal highs. We have some highs here, which are lying close to each other. We have this high, we have this high, and we have some equal highs here as well. You can see all these highs around this level. Okay, all these highs around this level. So like I said, these highs or lows, they act as anytime you see the highs and the lows, they act as magnet to the price. Okay, so price might want to come all the way, take these highs, or even this high as well. Okay, you can see we have so many highs resting around this place. So the price might come and take out these highs before maybe probably seeing a retracement on the downside. Okay, so or it can, even on the downside, it can come and take these lows here. Okay, so the reason again why the price is struggling probably at this level, you can see we have a supply zone here in the 1 hour time frame. Okay, we have a supply zone in the 1 hour time frame. So if you are taking all my first target for this buy will be around this point. So once the price reaches maybe around 1998, I can take partials and break even. Okay, I can take partials and break even. So that's basically how you trade in the smart way. Remember, there is no when we swing, we cannot swing without break even, because the key thing in forex is, one, you want to protect your capital, and number two, you want to minimize your losses. Okay, you want to minimize your losses. So let me take a clean chart for gold so that we can appreciate what is happening around. So from the 4 hour time frame, the price is moving more in a channel. Okay, this is more of a channel, not more of a channel, but it's basically a channel. So the price is moving or trading within that up channel. Okay, that's an up channel. So we said that one of the rules in forex trading is that the trend is your friend. So if this is an up channel, basically represent the uptrend, and you can see the price has been doing higher highs and higher lows, okay, higher highs and higher lows. That characterizes an uptrend, okay. So the reason why I might want to be looking for my buy entries around these levels, okay, I want to look for my buy entries around this trend line, okay. And again, you remember from the video that I posted last time, when you're trading the trend line, basically these retracements, when the price retraces to these levels, you basically want to see that most of the time we will have these demand zones, okay? Especially for an uptrend channel, we will have these demand zones. So the price will tend to retrace to around this demand zone, as well as it's testing the trend line, okay? So you can go and watch that video, and you'll see exactly what I'm telling you. So you can see this is the levels that the price is so much attracted into. So you can rewatch that video so that you can be able to understand it. It becomes easier and eases your journey in terms of trading what we call trading the uptrend. So these are the levels or the up channel, or trading the trend line. So these are the levels that you want to look at. Anytime the price is coming to retrace these areas, you'll definitely want to see when you look adjacent, you'll definitely want probably to see these demand zones, okay, especially in an up channel. So that can also give you a clue, maybe up to what level are we expecting the prices to retrace, okay? Up to what level maybe are we expecting the retracement? So being an up channel, therefore I'll concentrate more on buying, okay? Not unless now the trend is violated. If the trend is violated, then now we can change our directional bias, and now we look for bearish movement, okay? So from the 4-hour time frame, this was the lowest point, okay? This was the lowest point, the last high, higher low that the price created here. This was the last high low that the price created there before it posted this higher high, okay, before it posted that higher high. So not unless when we want to know that the trend has changed, now we want to see this price maybe come all the way past this higher low, the previous higher low, and if it closes below that higher low, we want to see a retracement to that point, okay, to that point or around that level, and then we want to see the price come down, okay. So it might come even all the way to that level to retrace to retest that trend line, okay. So once this happens here, now this is what we call a breaking structure, okay. This is what we call breaking structure, BOS, or what others call chalk, okay. So at the moment we are still on an uptrend, okay. Not unless there is now that breaking structure that now will shift our mind or our focus from being bullish to being bearish, okay. So that's it for gold. So we keep monitoring the levels that we marked. So on the upside, basically on the upside, maybe if the price comes to this level, to this lower trend line, and maybe retraces backwards or rejects from that level. So our first target on the upside will be looking around these levels, 207, okay, we'll be looking around 207, and then from there we'll be looking around 2022. We have a very key around 2022, that is around that level, and then we'll be looking around that level in the long term, okay, that is in the long term. So on the downside, in case we have the breaking structure, so the first level we shall be looking at on the downside is 1965, and this is a very critical level as well, because the price it gives us a very nice buying area because of the fact that we have a demand area, okay? The fact that we have a demand zone around that level, okay? We have a demand zone around that level. So the price might actually not even reach 65, but it might reach anywhere in this level, and then we might experience an uptrend again, okay? We might experience another price pushing a little bit higher, okay? So maybe a quick look at let's look at GBPUSD. Okay, let's look at GBPUSD. So for GBPUSD, like we had analyzed earlier, we had looked at this level where we had this resistant. Okay, so this side, this level was a resistant level. So that was a resistant level, this area. So resistant became now support. The price reached here, and you can see it's now trying to pulled out of this out of this area. Okay, so all these now it's pulling, it's rejecting from this area of resistance. Okay, from this area of resistance. Basically, we can say this is the neckline. Okay, this is more of the neckline that we are talking about. Okay, that is the neckline that we are talking about, around that area. So once there was this breakout from that neckline, the price came back to retest here. And the reason now why we are seeing GBPUSD pushing up, I'm already in this trade around 50 pips. It is around 50 pips in profit at the moment. So I will hold it. I will take partials, and then I hold. My target is around 1.26748. It might be attained either not probably maybe today or maybe even tomorrow. So we just wait. You know, this is the game of patience. You just wait. Okay. So once the price reaches here, so you want again to take some additional partial, and then now you can break even. Okay, you can also look at not break even, but you can put your stop loss in profit. Okay, you can put your stop loss in profit, because these will be around 107 pips. Okay, so you want to take partials or more partials at this level, and then you put your stop loss maybe into profit, like 20 pips, 30 pips in profit. Okay, remember the key thing, like I said, our goal is to minimize losses and to protect our capital. And one of the ways that we can be able to protect our capital is by trailing the stop loss. Okay, so as the price keeps on going into profit, you can trail the stop loss. Also, another way is to take partials. Okay, you need to be taking partials, that is partial profit, and then now you can trail the stop loss to ensure that it is a risk-free. It is a risk-free trade. Okay, to ensure that it is a risk-free trade. So maybe a quick look at EURUSD. EURUSD. Let's see from this, there is a setup that I had taken from around that point. So I had this buy setup, and the reason for this buy setup is because of this area. This was an area of it's a very critical area. Okay, so you can see this level when you go to this is 4-hour time frame. If you go to 1-hour time frame, you'll see that this is an area of resistance. The price struggled for some time before breaking through. So after the breakout, now the price came back to this level. So this side is resistant, this side is support. And the reason why I took that trade again, based on that perspective, and also now you can see it's trying to pull back from that level. It's trying to pull back from that level, and basically around 53 pips. Remember, the first entry is around this level. Okay, if you have an entry to that level, it's around 20, almost 20 pips in profit. So basically, how we look at this retracement, there is a video I did, you can go and watch, about layering, how you want to maximize these movements. Okay, how you want to maximize this movement. Once you identify your zone, there is you can the first entry, of course, you take with a small lot. Then if the price continues to retrace, you keep maybe, like you can say 20 pips retracement, you add another position. or maybe 10 pips retracement, you add a position. Okay, so I will want to refer you back to that video. You can go and watch about layering, how we layer, because it's one of the ways as well to ensure or to protect, to ensure that you protect your capital. I mean, you minimize your losses, and also maximize your profits. Okay, so that is the one benefit of layering. You minimize your losses as you maximize your profit. Again, you need to understand it clearly, because how we do it, you basically need to subdivide your lot size. If you use a lot size of 0.1, then you want to take maybe your first position here using maybe 0.02. Then if it retraces 20 pips, you can use 0.03. Then if it retraces another 20 pips from the lowest level here, you can do 0.05. Okay, so you can see total will become 0.1. So you have not over leveraged actually, because that is the lot size that you are supposed to use. So instead of opening only one position at this level at with a 0.1 lot size, you can subdivide it and have like 3 entries. Okay, so much about layering. I did a video about layering, so go and check it. Okay, go and check it. So if the price probably comes around this level, okay, so this will be our first target around that level on the upside. So definitely you want to take partials and trail your stop loss. Okay, so but in the long term, I'm looking around 1.1151. okay, this level in the long term, right? So remember, there is no swinging without trailing stop loss. Okay, there's no swing trade without break even. There is no swing trade without break even. I repeat for the third time, there is no swing trade without break even. You want to ensure you take partials and then you break even, so that you can swing a risk-free trade. Okay, so that being said, before we end, let's look at the fundamentals. So today is on Thursday. We expect some fundamentals for Euro, GBP. We have the PMI, the flash PMI, the French, German PMI. So we anticipate some movements. Okay, some high impact in Euro and GBP as well. So ensure that for our trades, the Euro, those that are in the EURUSD and the GBPUSD, ensure that you trail your profits, because the trades are in profit. Ensure that you break even. Okay, ensure that you break even, because we have some high impact news beginning around 11:15 a.m. okay, today we have a bank holiday for the dollar. So for gold, we might not anticipate some volatility. We might not anticipate some volatility, the fact that we have a US holiday dollar. So today the dollar might be just ranging. We don't expect huge movements. Okay, we don't expect maybe huge movement for the DXY. So we might experience a range. Okay, because the banks there are closed. Remember, I believe today is the Thanksgiving holiday in the US. So again, you can position yourself accordingly. Maybe you can avoid trading the USD for today and look for other pairs that you can be able to trade. Okay, but for GBPUSD, EURUSD, the fact that we have Euro high impact news here, we might experience some volatilities at these levels. Okay, so keep trailing your stop losses when the trades are in profit, and taking partials, so as to ensure that you protect your capital and you minimize your losses. From me, thank you so much. Tomorrow I'll be doing another video how we trade, showing us explaining in details how to trade the fundamentals. Okay, so ensure you like, subscribe, and also share with your friends so that they can too benefit from these free Forex educational videos. So until then, have a lovely day, keep safe, and let it be a blue day for you. So thank you so much, and we talk soon.